Alright, so if you're watching this video, it tells me that you are extremely curious and that you want to know more about investing into the stock market, because the chances are you've heard a lot of really great things about people who are invested in the stock market, how they are doing very well with it when it comes to their money and their investments, and you want to know what is the stock market, how you can get invested into it yourself, so then that way you can reach your financial goals and then one day reach financial freedom for yourself. Well, you are definitely in the right place, because I'm going to give you all of that information right here. So if I would appreciate it in return for this, if you could just do me one huge favor. It's not going to cost you anything. All you have to do is just find the thumbs up button right beneath this video. Give that thumbs up button a quick tap for me. And with that being said, let's go ahead and get right into it. Okay, so what is the stock market? So the stock market is a place where companies sell partial ownership of their company to the public, and they do this through the form of stock. Okay, so what these companies do is they take the entire ownership of their company, they divide it up into very small portions and fractions, and then they offer those pieces of their company to the public in the form of what is known as shares. Now, what are shares? Shares is just the name for when you purchase one of those very small pieces of the ownership of the company. So when you purchase like a share of, say, Tesla stock, you now become an owner or a part owner because you own a very small fraction of the ownership of Tesla as a company. Okay, so the more shares that you purchase and own means that you are becoming a larger and larger investor into that company that you were purchasing shares of. So like in this example of Tesla stock, let's just say if there was a total of 100 shares that make up the entire ownership of the company, and you purchase 10 shares of Tesla stock, well then that means you are a 10% owner into the company of Tesla, because you own 10% of their shares, so you control 10% and are an owner of 10% of Tesla. Now, the value of the shares that you own and are an investor into will go up or down, and a few contributing factors for that happening will be things like that specific company that you are invested into, their company performance, market conditions, and a bunch of other economic factors. Okay, so why should you even invest into the stock market? Well, the answer is simple. So it comes down to this. We know that saving money alone is never going to be like the strategy that anyone uses to build wealth, because it's just too slow of a process. You have to make the money, then you have to save it, and then you're just like the only factor in your money growing. Like there's no other thing driving like how fast your money is going to be growing. So that's just a very slow and a very boring investment, and you're never going to get wealthy solely through just saving your money, because no one, literally no one, becomes wealthy through just saving money. And on top of that, when you factor in inflation, the value of your money is going down, and because you're saving it and it is not growing at a fast enough rate, the purchasing power of your money is going down and down and in value over time, as your money is just sitting there and it's not growing at a fast enough rate. So that's reason number one why you should invest into the stock market. So historically, the stock market has provided significantly better returns than inflation, so your money can grow well beyond the rate of inflation. And then if you are invested into good quality companies, in the long run, you can significantly grow your net worth and your wealth over time. Now let's talk about the risk of investing in the stock market, because the truth is the stock market is not all sunshine, rainbows, and unicorns. There is risk associated with investing into the stock market, and there is always the potential that your investments that you made could go significantly down in value, or that you could even lose money. That's just the reality. Now, you can offset the chances and the risk of you losing your money, or by you investing into a bad investment, by doing proper research, studying the potential and the prospective investments that you are thinking about getting into. So how you do this is by when you are looking at a company and you're saying, hey, I think I want to invest into this company, you want to study that company very well before you ever make any type of investment into the shares of their company. You want to understand exactly what they do, what industry they're in, how they make their money. That you want to see that there is, especially as a beginner investor, you want to see some track history, like that they have proven to you over a period of years that they are very consistent at what they do as a company, and that they also have a very predictable path that they are going to continue to be successful, and that what they are doing in their specific industry is not just like a trend or a fad that is going to die out really, really soon. Because especially as a beginner investor, you do not want to invest into companies with like a short-term mindset. You want to invest in companies that are really great, really high quality businesses and you want to invest with them for the long run, because anything in the stock market can happen in the short term. So the longer timeline and horizon that you give yourself as an investor, and the market fluctuations, the highs and the lows of the stock market, they're very volatile, which means it can go very up in one day and very down in one day. So you do not want to be investing into companies thinking very, very short term, like 1 week, 1 month, or even 1 year. You want to invest for a significant amount of time, giving your investments the very best chance to perform very well over a long period of time. All right, so you now know what the stock market is, you know what shares are, you know what type of businesses and shares that you should purchase if you want to have success within the stock market. You know the risk associated with investing into the stock market. So how do you actually start doing this for yourself so that way you could build wealth over time? So what you're going to need to do is that you are going to need to open up an investing brokerage account. Okay, so what is an investing brokerage account? So an investing brokerage account is an account that you are going to sign up and open up with a very reputable company that is very well known for investing into the stock market. So you need this account in order for you to make the transactions, so that way you can invest into the stock market and purchase the shares of the companies that you want to be invested into. Now, I'm not saying that you have to use this particular company that I'm about to recommend to you guys, but if you want to go with a very well-known, reputable investing company, I'm going to go ahead and make the recommendation to you guys that you guys sign up and open up your investing brokerage account with the company M1 Finance. So I'm going to put a link to that company, M1 Finance, in both the pinned comment of this video as well as the description box of this video. So I'm going to recommend that you guys head down to either the description box of this video or the pinned comment of this video, click that link, sign up with M1 Finance today, and create your investing brokerage account so that way you can start building wealth for yourself. Hey, if you guys don't want to use M1 Finance and you want to use some other investing brokerage account, that's totally fine. It's not going to hurt me whatsoever. But what I do want to emphasize is that you guys make sure that whatever company that it is that you sign up with, that you find a very reputable, very well-known investing brokerage account company, because you are going to give this company access to your financials, your banking information, because they need that in order for you to transfer over your money, so that way you can start investing with them.